G'day guys, Mike White here with my Forex journey video number 5. It's Saturday the 11th of May and here we've got the week 4 trading results. So we'll jump straight into it. Let's have a look here, bear with me for 1 second. Okay, so here we have my results for the week. The week so far, the results for the week lost 0.28%. Ended up being 14 bucks. This is all based on a $5,000 bankroll, initial bankroll, and this is a demo account. So I'm going to be trading a demo account until I get 3 months of 3% minimum in a row, and then I'll be going live and adding more money each time I get the results I want to get. So here's the graph, trending a little bit down. That's fine, it's all part of the learning curve. Eventually this will flatten out and start pointing in the right direction, but we'll see how we go. So averaging 2 to 3 trades a day. There were days where I had no trades, days where I took a few more, but this is what I'll be showing you each week, and we'll just be paying attention to the graph. And I'll go through the trades that we made this week. So the first trade I made this week was a shocker. It was this one. It was when the euro dollar on Monday morning was trading. During the London session it was very flat, very quiet, and then during the end of the overlap between the London and the New York session there was a breakout, and I jumped in the way of it. I should not have. I'll show you the graph down here. This is what happened. So it was trending down there, and then it started plummeting. I got in front of it, I lost. I was too slow on my stop loss. I want to have a maximum loss of 5 pips. I was too slow there. I got back in, which actually was a good entry, but again I got stopped out for more than I'm willing to lose. And then actually there was another entry just under there which I didn't execute. I didn't put in the trade, and that's when it turned around and bounced back up in my favor and would have been a winning trade. So there was a lot to learn from this little disaster. Not quick enough on the stop, and not to trade the breakout. At least wait until it hits a stronger level. So these are my notes. When you see a sleeping giant wake up, don't get in its way. So that's what one of the traders were teaching me. And Armando, the head trader, chief trader in the room, was actually talking about this as it was happening, that not to get in the way. I wasn't listening. I didn't have he's in another room, and I couldn't hear him. So that was disappointing. He came out and gave me a spray, which is good because I learned and I won't do it again. So was the trade well chosen? No, it wasn't. Should I have been in the trade? No. Was the trade well executed? I said yes, because I did pick a point that I wanted to get in, and I did get in at that point. Was it well managed? No, I was very loose on my stops twice, and then I didn't get in on the continue to get in on the third opportunity. So definitely no. Would I do the same trade again? No, but I would look for the same situation and then look to manage it a lot better. Have I entered the business plan? Yes. Screenshot attached? Yes. So that's the picture of what was going on, and I was looking at the euro dollar, which is this one right here. I'll get into how to read this later on. Given a small preview on it. Basically these are a whole group of moving averages. Each one of these columns basically allows us to look at 20 charts in one column, so it just saves a lot of time. It doesn't make decisions for you, it just allows you to siphon through the information and make quicker decisions instead of going through 100 charts. So that was the first trade. That was the only trade for the Monday. On Tuesday, this is the Tuesday. Let's have a look here. Had a passive entry. Fibonacci is the type of trade, so it's instead of trading off say a moving average or a major line of support or resistance, a Fibonacci is a line of support or resistance, and it's calculated basically a moving average of Fibonacci ratios of the price action. If you don't know what Fibonacci ratios are, just jump on YouTube and search for trading Fibonacci levels, and there will be hundreds of things that you can look at and get a good idea of exactly what that is all about. So here are the notes I had. Right idea. Tighten stop maybe too soon. Okay, so this one actually, oh that's right, it actually bounced up eventually, but that's fine. Pay attention to price action around major levels. Resolve to look at least +5 before going even. So in the last trade, I was too loose on my stops. I didn't get in there fast enough. On this one, I was too tight on my stops, meaning I tightened them up too quickly and didn't give it a chance to run in my direction, even though I did have the correct stop there. So I lifted it up too early. That's fine. Was the trade well chosen? Yes. Should I have been in the trade? Yes. Was it well executed? Yes. So I did get in and I noticed it. Was it well managed? No. Too aggressive on the stop. Okie dokie. Would I do the same again? Yes. So that basically, even though I lost money, it was I was looking at basically what we're taught to look at, and it was just the management of it that got in my way. Otherwise, it would have been a winning trade. That's okay. And here are the charts as well. Okay, this is the next day. This is the Thursday, Wednesday. Sorry. One trade on euro dollar. Brought it to break even and got out. So this was a good trade. Had a good little win. My first target was 10 pips or until the price action stalls. So it did actually stall at around there, which is why I jumped out. Reason for trade: just entering passive sell with 3 pip walls. So 3 pip walls means, let's have a look here. There it is. I'll show you exactly what I was looking at when I entered the trade. Make it a little bit bigger. Okay, so this is what we're looking at. That's a pip wall, that's a pip wall, and that's a pip wall. So basically on 3 different time frames, on 1 minute, 5 minute, and on a 15-minute chart, were 3 different Fibonacci walls that it was heading into, and it was heading into a sell zone. So it was actually quite a strong level to get in, and this is what I was actually looking at when I took the trade. So if we look at it on the graph, it was going up, strongly trending up. So this was definitely a counter the trend trade, and you can see just as it touched that fib wall, it bounced off, and that's when I got the entry just on there, and I would have got out around the 7 pips there. So that was a lot better trade. Let's have a look there. Done. Okay. Must be consistent with entries. I actually chose a smaller entry. My position was smaller than I'd normally do in this situation, so I was being too shy about getting in. Should have got in quite a bit heavier, and I would have made some pips again. That would have taken me into the positive for the week as well, but that's okay. So got to be consistent about my about choosing a plan and working the plan. So making my rules before I get in. As soon as you get into a trade, you find yourself trying to justify things and rationalize. That's not the way to go. You make your decisions before you enter the trade, and then you manage it according to those decisions you made before you actually entered. Okie dokie, new daily highs, doing quicker. Yep, so that's that trade there. Next one, excuse me, got something in my eye. This was a big figure appetizer. An appetizer is basically a trade that is trending strongly, and it makes a tiny pullback, and then I'm looking to ride it again on the continuation of the trend. In this case, it didn't pay off. Lost 5 pips. I'll make this a tiny bit smaller there. That's fine. Appetizer, let's have a look what happened there. I haven't filled out the information here properly, but that's fine. It was an appetizer on the euro yen, so that was on this one here. Got in there, actually wasn't a bad entry. That's okay. Next one, another one on the euro yen. Okay, small profit, and I got out because it didn't bounce. So I killed the trade because it didn't bounce. So I actually made money on the trade at basically break even. And let's have a look there, euro yen, which is again this one here. You can even tell, you don't have to zoom it massively, but I will. Okay. So I got in off the black PMD, which is a stronger level, which I'm happy with. but these 1 minute PMDs, which is the moving averages, on the 1 minute time frame, we're getting closer together, so I was not. So there was momentum falling out of the market, which is why I got out. So even though I got out in the positive, it wasn't a big win, it was basically break even, but I would consider that a good trade. That's fine. Done. Okay. Next one, this was not a trade that was taken, but it was a missed opportunity. So hanging around 95, popped up to big figure and kissed 5 minute wall around 1 minute's pointing down. Okay, on the euro yen, which was right here. Okay, I'll go into missed opportunities another time, but that's fine. And this was yesterday, so there are actually no trades that happened on Thursday, which is fine again. And here we go, a refuel. This is the next trade. Okay, a refuel is basically a trade where I'm looking to find a top in the market and then ride it back down. So it's basically finding a level of resistance and riding out a retracement. Lost 5 pips there. Market on daily average. Market eventually spiked down into exit and refuel. So this actually ended up being a very good trade, but I was too early to the party. Okay. Done. Should have killed trade when the PMs flipped. So what actually happened? There. All right, let's have a discussion about PMDs. PMDs, euro dollar. Okay, so this is when I would have got in, and as you can see, the 1 minute PMDs, I'll just make it a lot quicker. These arrows are pointing down, they're the 1 minute PMDs pointing down. And I should have got out when they did point down, because when I got in, they would have been pointing up. And then eventually, they did point up, and then they made back everything that I was looking for. That's okay. So basically, it was a poorly timed entry. Should have waited for them to turn up and then waited for it to bounce down. All this will make sense. Okay, that's a trade there. However, this is going on too long, so I'll change the format of this to cut to the chase, to basically maybe just do some major lessons. That's okay. Things to improve. 1 minute we're reducing and flip. They should have exited. When they flip, and I know this. So here one I actually had a stop loss of 4.6, but I waited for the stop loss to be taken out. Just because you have to have a stop loss does not mean that you need to wait for it to be taken out. If you notice that the momentum of the market has changed, you have made a mistake. Get out of the trade. Don't wait and see, because then you're just playing a 50-50 game, and you're playing commission on that. So it's a long-term, definitely negative thing to do. Okay, that's the lesson there. Next trade, should have taken off to pay losses. This was a good trade. I was down for the day, and I needed to basically, if I'm down for the day, I'm looking to get back to break even. And then looking to push up from there. So this was a trade to get back to break even, which I did. I put on let's have a look here, put on a little bit more on this trade, put on a $50,000 position, so 5 minis, instead of a normal smaller one mini. But that's right, I wanted to do that because it was in a stronger buy zone. So it was around in that buy zone there in the green, which is fine. 6 made up for losses, good work. All up, this was a good trade. What I could have done is, once I had made up my losses, I could have sold maybe half this position and then let the rest run, because it did actually have a bit of a it could have got a little bit more up, but not too much. So if we have a look at the graph, I actually bought it right at the low, which is great, and then I got out there as well. overall that was a good trade. I could have taken a little bit more out of it, but that's fine. Okay, good work. Done. Next one. Okay, this is an active trade, meaning that it was just in this beige color here. It wasn't in the red or the green zone. I'd already made a couple of losses by trading in that zone during that day, and I have a rule of thumb where if I've already had 2 losing trades in that area, I don't trade there anymore and I wait for it to get to one of the extremes. Okay, if you are waiting for it to hit the extremes, you do trade a lot less because it's there a lot less often, but if you're not trading well here, or if you're not having some wins, it means you're not reading things as well as you think you might be. So I should have stopped after my second losing trade in the active zone, which is a bad thing. So that's the lesson there. Next one, an active refuel. Again, I shouldn't have been in the trade. It was my 4th one for the day, and again it was losing, so I shouldn't have been in the trade. That's what to take, the lesson to take from there. And this was the best trade for the week. It was the final trade. Only 20 minutes left in my session for the week. Okay, I got in. Let's have a look. My position was 50,000. I got in at 129 on the euro dollar. I'll show you exactly what I was looking at. Euro dollar. Okay, and that actually went on to be have a lot more points, which is fine as well. I did take my points. And I'm not going to be greedy about that, so I did pull out 8.5 points out of there. I only wanted 7 or when it stalls, so obviously it did stall, and I took my points. So just because it moved a lot of weight doesn't mean it was a bad trade. I'm happy I took my points because there was money on the table, and it's a good thing to take it when it's there. So I'm very happy with that trade. That was the last one. I saw it, I took it, and I worked the plan. So great. And all up, good trade. Okay, so there were definitely some bad trades during the week. There are a couple of good trades. There were more bad trades or poorly managed trades. And considering I only lost 0.3%, I'm actually pretty happy with the week. So there's a lot to learn from there, and we'll see how we go next week. So if you want to learn some more strategies on exactly what I'm doing, or actually meet some of the traders who have taught me to do what I do, or if you'd like to have a look at some of the testimonials of other rookies just like me who have gone on before me and are actually getting great results, feel free to click the link that I'm going to put at the bottom inside the screen here, and that'll take you there. It's all good stuff. Other than that, feel free to comment, subscribe, or email. And thanks for watching. We'll see you in the next video. Have a good day. Cheers, bye.